You're listening to the Digital Deep Dive, where we tackle the newest trends, strategies, and pain points shaping growth across the digital landscape. From Amazon and D2C to international expansion, join our host and e-commerce leaders across multiple industries for in-depth discussions on how to maximize your brands in the digital arena. Now, here's your host, Aaron Conant.
Well, hello, everybody, and welcome back to the Digital Deep Dive podcast. I'm your host, Aaron Conant, and have a great friend back today, Rick Watson. He's been on, I think, a couple times in the past now. He's a great friend, partner, supporter of the network. I know a lot of you listeners out there have chatted with him or heard him or either follow him on his, I think, weekly podcast. He does a lot on LinkedIn. He's a great resource that I use. And just excited to kind of kick off this conversation. We want to tackle it is earnings season, so there's a lot of information going around from Shopify to BigCommerce to Walmart to Amazon, and we're going to kind of do a holistic view, I think. And so I don't have a time frame set on this one, but we're just going to kind of hash through until we wrap it up. But Rick, I'll kick it over to you. If you want to do a brief intro on yourself, your company, that'd be cool. And then where can people find you as well? Because I know you put out a podcast as well.
Yeah, let's start with this. Hi, great to meet everyone. My name is Rick Watson. I am a technologist that has been in the e-commerce industry over 20 years. And I run a consulting firm that I've run for the last 4 years, where I work with a lot of mid-market private equity-backed brands on growth strategies and business optimization. How do we improve this business? Where should we go next? Short way to put it is like I help business leaders solve hard problems and bring resources to the table to do that across the entire direct-to-consumer and marketplace stack, marketing, merchandising, technology, supply chain, finances, kind of you name it. So that's what I'm passionate about. You mentioned about the podcast. I run a weekly podcast called the Watson Weekly, which I started about 1.5 years ago. And I'm really pleased with how that's developing. It's been growing, and I get a lot of great feedback on that. It's designed to be very short, 12, 15 minutes a week on a Monday morning. And so get your e-commerce fix as well as my analysis on what's happening. And then that's a little bit about me. I grew up in New Orleans. So I'm a Southern boy living in New York City, but I'm a native New Yorker at this point. I've been here 12 years. And so that's a little bit about me.
Awesome. So I want to kick off. Let's tackle Walmart first. Wherever you want to start. Do you want to start with Walmart? Here's where I'm talking to brands on a daily basis, is they want to know where to win. They want to know who's up, who's down, how do they compare to others? Because right now it's about as crazy as it's ever been. I've got a lot of direct-to-consumer brands who are all in on just D2C and Amazon that are starting to really consolidate and restrict right now. A lot of movement then on headcount, usually, if PE has come in. And so maybe, I don't know, is Walmart a good place to start?
Yeah, I think Walmart is a good place to start. Look, I think Walmart is in a good position right now. And I think they were even in a good position before this market, but I think the fact that Walmart is a great operator and caters to a value message has just sort of kicked them into a different gear relative to other players right now. So if we're going to talk eCom for a second, Walmart eCom grew 17% in Q4 last year. Overall last year, they grew 12%. And so Walmart US e-commerce is up to an $80 billion business now. Now, they don't break out first party versus third party. Most of this is first party. Amazon's marketplace is still relatively small. They are talking like their SKUs. They're now 400 million SKUs on Walmart's marketplace.
Well, that was their big shift, right? Hey, let's let everybody sell. Let's take an Amazon type model. Why do we keep restricting? And I'm still not sold on that, right? I think people like to have a trusted place to go to. And I think Amazon has stubbed its toe a little bit. I know everybody, is out there, can sell anything, and it's the everything store. But I heard a lot from brands, not necessarily from sellers, but from brands kind of apprehensive about Walmart opening up their marketplace to.
Yeah, look, the numbers I've heard are not tremendous, something like in the tens of thousands of marketplace sellers. 30,000. Yeah, depending on who you're talking to. In Q2, they didn't report this in Q4, but in like sometime at the end of Q2, Q3, they reported that their marketplace seller count was growing 60% year over year. So it's a good trajectory for them. Now, there are a lot of brands that I talk to, you mentioned now we're like talking about brands that are like, look, I can't afford to spend any time on it, Walmart, because it's so small.
Right.
Because their e-commerce business is small. And so if you look at Walmart eCom compared to Amazon 1P, Walmart is like a fourth of Amazon 1P, which we all know that 3P is where the action is on Amazon. And so the reality is Walmart is still an emerging ecom channel, but so that's a starting point.
Yeah. Well, then are you like recommending that this is back the early days of Amazon, where you're there early, you're building up the ratings and reviews, you get this unfair advantage that you don't realize 3 years from now. But at the same time, I also think of those days, back when I was, on the brand side selling on Amazon, everybody thought you went from 0 to 200 billion in a year, right? Oh, by the way, there's a hockey stick that takes 3 years. So
right.
Do you think we're like at the beginning of the hockey stick?
I do. Like, if you ask me, like, what is the best channel that is still relatively undiscovered in e-com in the US, that would be Walmart. And not because you're going to go there and it's going to be 25% of your sales this year as a brand or a seller, and from a 3P point of view, or even a 1P, especially if you're e-com and you're not in stores. But it's the place where like LinkedIn was 3 or 4 years ago, or Amazon was in 2005, where it's like, okay, they just came out with this thing called Prime, and yeah, this thing could be big in a few years, and like they went on a tear. Now Walmart tends to be a little bit more measured in their growth because they really watch their profitability closely, but to me, the watchword for Walmart is start experimenting, get your foot in the door, don't overspend or over allocate your internal resources there, because obviously everyone knows like where am I making my money? It's on Amazon. It's either on D2C, it's on Amazon, or like your other trade channels like Home Depot, Walmart, Target. Those are your big accounts. The Walmart ecom doesn't, it's in the list, but it's small relative to Amazon.
I don't think you can ignore it. And I almost gave up on Walmart a couple of years back, right? After they consistently stubbed their toe every time they turned around, how the bidding worked for their PPC platform, all of that stuff. But as we come out of the pandemic here, and as we're in the current economic times, I think you kind of hit on it. They've got a great price point. They're slow and steady to build out the platform. At some point in time, they will figure it out.
Yeah.
And they're on the right trajectory. So at this point in time, I'm kind of saying the same thing. Get in there, experiment, move around, but you can't be dumping tons of money in. I mean, we've got some of the, the top people in the space who kind of say the same thing, right? Hey, if a brand gives me $100,000 to spend in Walmart, on the .com side for advertising, I'm going to give them 30,000 in sales, right? It's a net negative right now.
Yeah.
So
here's a number I would use. Like if you use advertising as a proxy of 3P, Amazon advertising is about 10 times bigger than Walmart advertising, maybe a little bit more. So Amazon or Walmart just revealed they have like a $2.7 billion global advertising business, which actually means their US number is less than that because Flipkart will contribute to that number. So let's say it's 2 billion or something. Amazon's advertising is something, 35 billion last year. So that's a big number.
Yeah.
However, they're growing faster than Amazon. I mean, if you can believe, in the last year, Amazon 1P was flat.
Yeah. But
I think I'd still like the fact that anything on Amazon could be flat. I think it doesn't compute for a lot of people.
right. I mean, when we look at Amazon and what they're doing, though, is this is what I got from brands, a ton of brands. When you dial back the available inventory space, right? Because you're shrinking your warehouse space. Oh, by the way, you're carrying 12 weeks of inventory and you decide to go to 2 to 3 weeks. And therefore you don't issue POs on the 1P side for 2.5 months in Q4. And you gave nobody the heads up. Now we've got brands that
Not that would happen.
Yeah, not that would happen. Just,
Hypothetically between friends here.
And they're dialing it back. They're like, actually, I have less warehouse space. I don't want to go out of stock. Where else can I spend my money? And we know Amazon's pay to play. It just is. And so if brands are dialing back the spend specifically on Amazon, and by dialing back, I don't necessarily mean they're not growing. Like used to you grow it year over year, but they're saying, actually, I'm going to be flat year over year. Where else can I spend those ad dollars? I mean, the natural spot, especially with D2C shrinking, right, is Walmart. And, that's where I can see them growing incredibly quickly. But at the same time, I guess rationalizing 100 plus brand conversation.
There are three places, really. One is 3P, which some people aren't ready for. There are a lot of 1P vendors that aren't real set for 3P. They maybe should be in the future. Second is D2C, which for a lot of people, it's a slow burn. It takes a while to get people doing that, and it's going to be a niche for a lot of these B2B brands. Primarily, they're selling to wholesale, and that's why their 1P is their focus. And then finally, Walmart, right? Those are the three.
We stepped aside on Target, though. What are your thoughts on Target?
Look, I think Target is, right now Target is high quality, but smaller than Walmart.
Yeah.
That's the positioning. It's a tremendous retailer. I think they've been very challenged in the last year in this economy. And to me, the simple reason is it's not like their management team got stupider, because I think Target has one of the best management teams in the industry, is as inflation started to go up and down and consumers started to flip their priorities left and right, go to more private label or switch out of anything higher priced items, Target's positioning started to become a little bit more challenged. And they didn't have as much exposure to food and consumables like Walmart did. And I think Target lost some of their audience to Walmart during this time, because if consumers are changing their spending priorities every month based on what the price of eggs are doing, because that's squeezing the rest of their budget, then how the heck, if you're an inventory planner at Target, do you know how much to order and when, especially like 6 months in advance? Like, it's impossible. And so they have really taken a bath in the last year from analysts and earnings because of inventory and markdowns, and like the fact that they're so broad in categories, and why you and I we love Target so much. And they create great products. People like going in there. It's a great experience. It's very convenient, but they in a lot of categories.
Right.
And right now we're kind of like retailers that are in that space. They're in like a SKU by SKU dogfight. As consumers say, you're like, I don't need to buy this month. I'm going to wait till next month. Or I used to buy the brand that was at a $40 price point. Now I want it at the $20 price point so I can spend the money because groceries is 15% more of my budget than it was 3 months ago. Right. So that's what the consumer is doing.
The experience, though, for buy online, pick up in store, to not even go inside Target, has nailed it, right? The beacon senses you just drove in. By the time you get out of your car, there's somebody literally there putting it in the trunk of your car. It's
pretty
awesome.
Scary.
But then I have a lot of people going crazy over the Target marketplace if you can get in there. And you can drop ship. You've got 1 or 2 day shipping capabilities. If you're a brand in that space and you can get into the Target marketplace, Target Plus, there's a lot of excitement there. But again, that's carving out from, we'll call first party with Target, if you want to call it that, to relate it to Amazon, where they're buying wholesale. Completely different story. But again, it has to be very curated, right? They're not quite taking the Walmart route of, hey, by the way, let everybody in, which I think is good, actually.
Yeah, it's a handful of people, right? It's not, the masses cannot get on Target Plus.
Yeah. It was really funny because when they were first kicking that off, I was talking with the Target Plus team and I was like, hey, you should jump on, right? Like one of these like webinars. Everybody wants to know how to get on Target Plus. Like we could, like, that would be awesome. Let's explain to the network here how they do it. And the lady was like, no, it's the last thing I want. It's like,
yeah, don't contact me.
Yeah. They're like, I want to go with those, like the trusted third-party resellers. That's what they were going, the patterns of the world, right? Where I can go to one spot and I can buy it all.
Yeah.
Get access. I can have it shipped one seller. I vet out one person. Yeah. If there's an issue, I just say buy it all, but go to one seller who's got 50 brands, 100 brands, and there's one point of contact as opposed to 50 to 100. I just thought it was funny. It was like, that's exactly the opposite of what I want, is to get in front of, 200, 300 brands. I was like, oh.
Yeah, which is hilarious because basically Target's saying they want to work with a distributor.
Yeah.
More or less. Whereas in the last week, Amazon just told all their UK distributors to get out of town.
Yeah. I saw that article pop out. That is interesting. So for those of you who don't know, Amazon is basically saying we want to deal direct with everybody. We don't want third-party distributors selling your product. So we're coming straight to you. It'll be interesting to see if that bleeds over into the US. I don't know how it does. There's so many companies that aren't prepared to go third party or do not want to go first party with Amazon. I mean, you're kind of hitting on it. I mean, that's where essentially I was at, was we were used to truckloads going out, right? And we weren't used to individual pick, pack, ship. And to put that into place, we did end up opening a third party account, but to put through the updates into SAP and all the user exits and everything I had to, you carve off a virtual warehouse within your warehouse, but then it's not protected inventory. So then you have to put a gate. You have to actually cage up your inventory so somebody doesn't come and grab it. Like, we did it.
It's a nightmare.
Yeah. Right.
But Amazon, it's safe to say Amazon 1P wasn't ordering truckloads from you.
No. Right. So it was crazy. It was
like, how about we order a week?
Yeah. Well, that's any launch that you do. Right. And that was one of the things I was always explaining. I would put through like, hey, Amazon will take everything. So you just upload the new awarded into Salesforce and then everybody's like, congratulations. I'm like, they're going to order a case. Right. Like we'll get to a truckload, but today it's a case.
Right. Yeah. It's a case. Yeah. Don't everyone get excited.
So what do you see then on the direct to consumer side? I know we're kind of bouncing around here a little bit.
Yeah.
So we talked about Walmart, Amazon, Target. But on the direct to consumer side, a lot of brands that I'm talking to, there's a full on push to get in store. And if you didn't start this journey a year and a half ago, it's really tough to get in store.
Right.
And at the same time, we've got all these buyers who now just use the data, that they can find across the web for ratings, reviews, sales data to then make a determination. What do I put on store shelf? Right. And it's a unique spot for the companies that are, have focused on Amazon or direct to consumer to try to break into it. And then you have the flip side, I've talked to, companies who were part of the subscription, healthcare side, personal care. And all of a sudden they're in Costco. Like, well, why are, so digital, direct to consumer is down because anybody can go into Costco and buy, a 13-month supply. So
right. Yeah.
Why would I have the monthly show up?
Right. Yeah. I think a lot of these direct to consumer brands kind of miss the point of distribution and meeting customers where they are. They thought that like, oh, we're going to make a lot more money. We want to control the whole experience, when ultimately that will get you to a certain point in your growth. And then you're going to plateau because that's not the only place people shop.
Right.
So the fact that it was a mystery to people is, a little bit of a surprise. And I think it is somewhat of a the result of too much free money in the market. A lot of these brands got a lot of investments. And so 40% of those dollars went into Facebook and Google. And that was as long as they could keep raising money, then they're doing that. So I think if we're talking about like in this economy that we're in, where D2C should be focused on, if not stores, it's their operations. It's like, do you understand your P&L? What products are making you money and not making you money? Do you have too many SKUs? Do you have too few SKUs? Like, what are your consumers asking for? Why are they coming back to you? Are they coming back to you? Like, what kind of experience are you giving them? So it's gotten more expensive to attract a new customer. And so as a result, keeping your existing customers happy and providing that experience after the post checkout, after that checkout happens, giving them some kind of special experience that they wouldn't get somewhere else.
Do you think there was a lack of knowledge on in the investment community as they're buying these brands, right? That are on this crazy trajectory as they're building a brand, right? It looks like the growth will go on forever. And so the multiples they were getting, it's really interesting that the episode previous to this one, right, was with Michael Southworth, and it was around the current the current state of funding for D2C brands and where they're at. But it's like, they were on this trajectory that was going up, and it was fueled from the standpoint of, hey, during the pandemic, you can fall over and make money in e-com. It doesn't matter, right?
Right.
It was there. And so they're at this time where, they're just printing money, not seeing that at some point in time, you're going to tap out, the available base that you can reach and just on the internet as a whole to get to your site. And that to get to the next level of growth, you're going to have to get in store. But we had all this money coming in to acquire these brands, thinking what it looked like to me was like everybody was believing it was going to go on forever.
Right.
Like people weren't going to go back to in store. And the reality is most business is done in a store still.
Right. Yeah. Look, I think here's what I find. And about every 10 years, venture capital seems to relearn the lesson that retail and brands are not an investable category, because it's you're manufacturing and selling. That's a different class of asset. It's not intended to be like these unicorn companies. Like, just go back to 2001 with like the pets.com sock puppet. I mean, that was never $1 billion business. And like 10 years ago, well, they learned it again. So pets.com was 20 years ago. 10 years ago, what did Andreessen Horowitz invest in? Like fab.com. Probably over $100 million and put in there. What kind of outcome do you have to justify $100 million investment? Like, over $1 billion, easy. So these brands, look, there's nothing wrong with a brand scaling direct to consumer to $100 million and getting sold, but don't raise $80 million to do that.
Right.
That's the issue. The issue is not necessarily that D2C doesn't work or can't work, but the money to equity ratio just gets out of whack. And then who's going to take advantage of these? This is the big CPG brands. They're like, okay, thank you for all someone else's money funded all this product research. You have a few hero SKUs. It's like native or something, like, we're going to add you in like 15 new categories. Thank you. You've seeded the market for us, and we'll get you where you need to be, because we know where the shelves are.
Right. Well, that's it. At the end of the day, right, is that ride to 100 million based on, that valuation and getting there. The next step to 200, 300 million is a lot tougher. You have to have somebody that's going to put you on a store shelf. And that's just not easy. I mean, a lot of people are like, oh, I'm just going to call up everybody loves my brand. They're going to want to be on the store shelf. Well, that's a different conversation, right? You are literally going to the buyer saying, hey, I'm not only, I need to kick that current, tenant of that shelf space out.
Right.
And I'm going to convince you to do it because the product I'm going to put on the shelf is going to move faster. You're going to sell more at a higher margin. And if you can't sell more or tell them the story about how you're going to sell more at a higher margin, they're probably going to stick with the status quo. It's already there. They've already got the relationship. The trucks are already showing up. People already know how to put it on the shelves.
Yeah.
It's just a lot harder conversation. And now with all these brands, like anybody can create a brand now. That's the amazing thing. Literally anybody can create pretty much any brand they want, as long as it's not a regulated industry. There's more competition than there's ever been before.
Right.
And so,
and look, your conversation before about this distributor idea, I think also applies here. If you're a buyer at a big box, who are you going to have a more efficient conversation with? A brand that has 100 SKUs and is in 6 categories, and you're placing them all throughout your store, or a D2C brand that has 1 hero SKU, basically, and maybe a couple other SKUs that no one has tried yet, that they're trying to developing, but they really have 1 hero SKU. That's what a lot of these D2C brands has been about.
Right. Are you going to gamble, right, on that?
Not, they're looking for big CPG to gamble on it, really. They were like, okay, we'll wait you out. Unless you're a specialty store, and that's a different situation. Like, look, if you're a specialty store, you want something maybe the consumer hadn't seen before, you keep them coming in the door, that's fine. But try telling that to Walmart.
Right. I mean, that's what you're going for, I guess, in the CPG space. Get acquired. Right. Get acquired and then you have an earn out and you take it to the next level.
Right.
Is there new cool things that are popping up? Like, what are you chatting about? I mean, you chat with a bunch of people as well.
Yeah. I mean, look, a lot of people, I almost hesitate to bring up the AI discussion because that's what everyone is talking about right now, and Chat GPT and BAR.
I'll tell you we can go down it a little bit. What I love about AI, if we set aside, the Chat GPT portion of it, is I feel like AI is at a point now that everybody said it, all the tech companies said it was 2 years ago, right? Where, hey, we got AI, we have AI, and there's like 10% AI and 90%, farming it out to have people crunch it on a bunch of different, software systems to kick it back into the AI that finally spits it back out. But I feel like AI now is actually come far enough along. A lot of it was the investment that poured in during the pandemic, that we're seeing a lot of technology. Again, setting aside Chat GPT, we could, that's 17 other podcasts and, do a real time, fun, experiment with it. But, the fact that AI at this point in time can power all this new tech, right? I think it's phenomenal. Like, people are looking for multi-touch attribution tools. People are looking for CDPs that really work. Like, there's all this tech that was almost there, but it was too expensive and too laborious. And now I think we're going to see the cost of these come down. And we're going to see at the same time, it's really, as the funding market shrinks, right, it's going to start consolidating, hey, who's a real winner and who's not. And we're going to see fewer, of these technology companies out there, but there's going to be more money concentrated flowing into them. I don't know. I'm excited because just living in the digital and the tech space, that we're finally there where I think AI is actually working to make this.
Yeah, I think an interesting space that people are starting to talk about, but I don't think they've fully realized yet, is like, if you think about the agency space, like any digital agency that's creating some kind of experience, like website design agency or an advertising agency that has to create these little ads and videos and whatever. I saw a stat in the last year that something like 80% of their budget is creative services, which means actually like literally creating the images, copy, and videos, the production quality of all that, all the people, you need to schedule like a day shoot and put the product in the different thing. And then you need to have a model, and the model needs to be the right kind of model. All of that is going away. Literally all of that is going away. I think. And so I think the cost basis to start a digital agency is going to go way down. Because, even for your luxury type brands, whereas that was one area where you kind of needed that touch, right? And I think a lot of that is going to going to go to virtual because the cost is just going to be so much cheaper. Like a 10x difference in cost is going to move people. I think in both copy, in both imagery and videos, all those things.
And timing across the board, right? Totally. Think about anything that, the furniture category is really taking advantage of it, right? But if you can upload just a CAD drawing, right? And it can kick out every single variation on every single fabric, right? Instantaneously before the stuff gets unloaded from the boat.
Yeah.
Right. You can, as soon as it hits the dock and you can ship it, you've got all the advertising out there. You've already built it up, as opposed to it hits the dock. We have to take it off. We have to ship it to a studio. Yeah. We have to take all the imagery out. Oh, by the way, we forgot to put this image or that, this, accessory or product or pillow or, plant or book on the table, whatever it is. You just add it all digitally.
Yeah. And it's not just like, I feel like before the last 2 years, product shots, like PDP, your primary PDP shots was like hero shot, just the product by itself, like a flat lay or something. It feels like that was pretty much digitized already, but the lifestyle photography was not. And that was still, you're shipping it to, across the country to somebody who had a studio, or you're doing something in town, and that takes weeks and months, and you got to redo it because it's not on my brand style book, and whatever, all that stuff you need to deal with. I think lifestyle photography is going the same way.
So then what happens with UGC, right? Because UGC, the user generated content side, through influencers or whoever, right, was this interim fix, right? I need lots of content. I need it in real world setting. And I need it to be cheaper than all of this. And I need to be able to get it near real time. But the big issue, I say one of the biggest issues, is when stuff is off brand, when they get a lot of assets, but they can only use 2 or 3%, which is still cost savings, even if they can only use 2 or 3% because they got so many assets. Well, now you can literally, there's AI tools out there, right, that put a person in there with a purse on, right, walking down the street with a match of color shoes, automatically just generates it, and it looks real to the eye.
So I think there are two. I want to split apart two types of content a little bit. One is lifestyle content, where you're it's sort of a day in the life type of situation. You're walking down the street with a purse. That's one thing. That's not the same when you talk about UGC. To me, and you're talking about influencers, you're talking about reputation and trust, because this influencer is supposed to be an expert, whether in their own mind or in the minds of their audience, it doesn't matter. They have unboxed this thing, and so now you think it's authentic, and they're talking about how they used it in the first week and it helped them run a marathon, like whatever it is they're doing with this product you gave them. That kind of authenticity and trust and reputation, AI, you can't AI that away.
Right.
And so I think that part of UGC is not going anywhere. And I think that part of influencers aren't going anywhere either. So I think that kind of like interim comment, I think maybe it is an interim for something else. And like, maybe you don't want to send it to an influencer.
I know a lot of brands.
The trust part isn't going away. And so maybe trust will figure out trust some other way.
Yeah, I know a lot of brands just using, trying to get the influencers to create a ton of content that's not necessarily ever published on the influencers there's a lot of UGC just content generators out there. It's not used anywhere in their social media feed, but they're being paid to create the content.
I got it. I'm with you.
Because I think the influencer standpoint is great. That trust that's there. There's all these platforms now where you're doing a new item launch on Amazon. You're using micro influencers to drive them to the drive traffic to a site to get detail page views, obviously conversions, ratings, reviews, and you can supercharge, a new item launch, which is usually pretty difficult on Amazon. But then there's also just, I need content, and how much content can I get from my own Facebook posts?
Right. Yeah, that's an interesting point you meant about influencers using just for creating content, non-social content, which I do agree that 100% would be replaced by AI generated imagery.
The brands a lot of times are like, this is off brand, I can't use it. Well, you set AI to create all on-branded content and you just use it and it looks real. You go to like Crate and Barrel's website and you check it out. I think it's like 85-90% of the images on there are just, CGI. And it's not like it was a picture taken and they put different stuff on it. No, it's all computer generated.
Right.
But it all looks real. Right. It all looks real.
Yeah, you don't care. As a consumer, you don't care. Right. Until you hit sort of that that uncanny valley situation. If you're on the wrong side of it, you're like, oh, this looks fake. The shadow's in the wrong place, or but yeah, I think it's already good for that.
Yeah, you and I would look at that just for the fun of it to see if it's real or not. But most people,
totally, they're not paying attention.
No, like, oh, that looks cool, right? And then they're ordering a bunch of fabric samples and then ordering what they want. Right. But yeah, I think this whole AI space, I'm excited for it. A little scared, I guess. Kind of scared, kind of excited.
Right.
But maybe there'll be an AI Aaron someday, moderating events. So
I'm unsure if we don't already have AI Aaron here.
Yeah. We'll do the real throwback. Do you remember Max Headroom?
Yes.
Way back in the day.
Yes.
Max Headroom. Yeah, right. That's so creepy. I love it. What gets you excited? Like, I'm excited for AI. What gets you excited? I mean, you're in this cool spot of having, the background, the marketplace, the direct consumer. You interact with a ton of brands. Like,
yeah. What gets me excited is, look, I like helping people build solid businesses. It sounds boring, but to me, boring stuff is exciting in e-commerce, because whenever you get like really down to the brass tacks of things, e-commerce is about operations. It's about operations to get products, to manufacture products. Like, what products do you manufacture? How much do you forecast? You're gonna do. If your forecast is wrong, you got too many. If your forecast is too low, you got too few. Your advertising operations, how are you managing that? And then fulfillment and customer service operations. All those things have to be working together. And by the way, you need to make a profit. That intersection has always been the most exciting part of eCom and retail to me, because I think as we've been through these different waves in e-commerce in the last 20 years, we're just coming out of a point where, in 2019, 2020, people thought advertising was the most important thing. And the fact that I could create a brand, then I'm done. Like, doesn't need to ship quickly.
Yeah.
I could still ship in 5 to 7 days.
You got to have product.
Never mind the product could ship on Amazon in a day and a half or 2 days. And pandemic came. It's like, oh, what do you mean the supply chain isn't reliable? Then they understood the importance of, like, where is it manufactured, and how much do I have landed, and can I count on what's going to happen next?
Yeah, how much of it is also unwinding? What I've seen is, with all this different kind of tech and all these different things you can plug in on the back end of your D2C site, or different tech to help out with Amazon, Walmart, international expansion, multi-marketplace listing tools. Like, everybody for a year and a half was looking for the silver bullet. If I just add a CDP, everything's going to get better, right? If I just, update my, email marketing partner, or SMS, or if I allow returns, or right, direct mail plugins, right, insurance on the back end, tracking, whatever it might be. Right. There's this proliferation of tech on the back end.
Yeah.
Like, are you finding yourself going in and like just unplugging stuff and just seeing, wait,
Look,
I unplugged five things and nothing happened, which means we can probably get rid of these five things.
it's not a bad idea, to be honest with you. Like I could tell you, especially in these smaller D2C brands, the term I think it is most unhelpful in that market is this term called the app stack. And so I have my Shopify store. I need to, and they're on Twitter and they're on whatever. They're asking their friends on Slack, what is the app stack I need to scale my store? And so like they come up with a list of 10 things and they start installing it. By the way, their website like massively slows down.
Yeah.
From day one. Consumer is confused. They don't have time to run 10 different apps because they all have different admin UIs. It's just like 3-4 people at this brand tops. And they don't know how to run it. And so then they start hiring all these people to run these apps that they think they need. And so they're kind of not looking at it from like, okay, why do people want to buy this thing? And that's usually the question that some people forget about. Like, I don't need more advertising if my effectiveness is already low. The first thing I need to figure out is like, why aren't people buying more of this that are already walking in the door? You know what I mean? Like my website has 1.5% conversion. I don't need more advertising.
Right. I mean, it actually hurts it. Right. I mean, even direct consumer, Amazon, wherever you're at, if you're looking at the conversion data and if you're driving traffic to a low converting landing page, doesn't matter where it is, the search algorithm, updates to say people are looking for this. And when they land on this page, they don't want it.
Right.
So don't show this page.
It's a negative signal.
Yeah. And people don't get that. But then this goes back like way back to, when I was selling on Amazon, I was doing this all the time. I just updated my content till it was the best around. And I had 1/10 the budget the national brands had for their OTC farmer products. But they just got addicted to it, right? You can't get off it because to maintain sales, you have to pour more money in, but you're sending it to a lower converting page, which drives it down in search. So you have to spend more in paid media to drive more eyeballs there, which then gets you in this death spiral to go down. And at some point in time, yes, you need to just stop it, reassess, update, and then start pouring into it. And that's just hard, right? When you've got to hit a number month over month.
Now, look, I mean, if you're launching a new SKU on Amazon, you'll know in the first 2-3 weeks if it's going to do well.
Right.
If it hasn't done well in 3 weeks, it's not going to do well in 6 weeks.
Right.
You should take it down and try again.
Yeah. That's against traditional thought, right? Yeah. Traditional thought is, well, it just hit the store shelf, right? And the reality is a lot of the executives we still have out there don't have the digital experience, right? And we've got to wait another 5 to 7 years for, them to essentially age out or move on and get a new digitally savvy group in there that wants to take a look at it holistically as opposed, because it's hard, right? And it's changing so fast. If you aren't in it on a day-to-day basis, you can never catch up. You just can't. You have to live there. Well, executives and the CEOs and, the teams, they don't have the time to do that. They're running a company.
No, they don't have the time to do it. And especially if eCom is new to the business and they've been around for 15, 20, 30 years. eCom is a gnat.
Yeah.
It's like it's like they walk.
It would go away.
Yeah, they walk away. They walk out of their warehouse and it's almost like something that gets stuck to their shoe. They're like scraping it off on the pavement. And that's their D2C business. And so their sales team is like, well, we don't really want this to increase anyway. So we'll let it die over here. We'll answer their questions, but we won't promote it.
Too funny. As we kind of get to the point here, any last things you have, any questions you have for me? I always like to, I've been picking your brain for the longest time here.
What do you think is the biggest opportunity brands are missing that you wish they would talk to you about that they don't? Like they're talking to you about the wrong things.
Yeah. So a couple things come up. There's not a single bullet answer. The silver bullet answer. The only silver bullet is hard work. And it's trial and error. And it's something that I'm really big on right now is an R&D budget for the digital group. That's right. You know, my background, I'm a scientist. I was at Pfizer for a while. It's R&D. And the cool thing about R&D is also the bad thing about R&D, which is it's just sunk cost. It's just gone. At some point in time, you reap the rewards from it, but it's not immediate. You're just pouring money into it. But there's a budget that's set aside to do that. And it's not like that you do anything you want with that budget. You're careful with how you use it, but you use all of that budget every year to test and learn. And the reason I call out that it needs to be a digital R&D budget is because the executive team, something clicks when it says R&D, where it says, I understand I'm setting aside money that will have no immediate ROI associated with it, but it is a learning such that the ROI will show up in other parts of the company at a later date. And until companies want to commit to that, right, we're in these weird things where everybody's like test and learn, test and learn, test and learn, but nobody's willing to test and learn. Right.
They're only willing to test and learn with like new ad copy.
Right.
You know what I mean?
Right. But there's so much new ad tech coming out. There's so much new technology that you have to be able to set aside time to jump into. And maybe a portion of that is an agency cost or a new service provider or a consultant to bring in. It has to be set aside where there is no immediate ROI. And the bigger the company you are, the bigger that has to be. But that has to be put in place in my mind. I set up my own, digital organization. That's the first thing I have. And then that money can then be spread across multiple departments. It doesn't have to be just marketing. It just have to be the digital team or the eCom team. But we've got this money set aside for you to go investigate and learn because it's changing so fast. Anything we decide on today, needs to be reevaluated in 6 to 9 months because it might not be relevant anymore. And that's something that I'm harping on with pretty much, every leader that's out there today is put this in place. Again, you won't see that at ROI today, but it will pay off in other parts, right? That's really one thing I truly try to push through. And sometimes people have issues with failing, which happens with R&D. You're going to spend money that just goes down the drain.
Yeah.
Another time people have issues just going outside the norm. I've got the stack line. I've always had it. It's always worked. Why would I go anyplace else? Well, if you had a budget, would you compare with 2 other people? Oh, 100% I would. Okay, well, here's the budget. Go compare 2 other people. And then you can hold your current people accountable, but also stay on top of the newest trends that are out there.
Yeah.
So you can tell cool. That was a great question. It kind of hit a passion point there.
No, love it. You should do a podcast.
Yeah, I should, right? Love it. Too funny. Well,
awesome.
Any last thoughts here, Rick? I mean, I could pick your brain forever.
It's good. Look, I mean, here's a crazy thing that I've noticed in my own personal network on LinkedIn and other places. I've never seen so many old school Amazon and eBay sellers that have been around for a long time cheering for Walmart now.
Yeah.
Isn't that crazy?
Yeah, I agree. I got brands cheering from Walmart, right? I got tons of brands cheering for Walmart. And it's Amazon. People hate to deal with Amazon. They absolutely hate it. 1P, 3P, it doesn't matter. I got 1P people trying to go 3P, 3 people trying to go 1P. And the reality, my old vendor manager, the first one that got me, this is way back in early in the 20-teens, got us on Amazon. And I had this candid conversation. Is really great. He's like, so this is 10 years ago. He's like, Jeff, if he could snap his fingers and turn us all into robots tomorrow, he would. Right? It's that dehumanization 100%. Of everything around Amazon, which is what people aren't used to. We want relationships. We want to be able to call. We want to be able to have a candid conversation. And that's all continually getting more and more stripped away. And Walmart's
Right.
there like, yeah, we'll partner with you. Why not? That's what we do. That's what we do.
Right. Yeah.
But it's
I
funny you
just
say
find it
that.
hilarious that like the OG evil empire, Walmart, who every supplier hated for years because each year they would squeeze your margins more and more, in the 80s and 90s.
Yeah. But
They're
then you
the
have,
cool kid again.
yeah, they're the cool kid again. But what's funny is those same companies, the same people that were complaining about Walmart doing that are all in on Amazon at the time when Jeff Bezos is saying your margin is my opportunity. Like he clearly said it and you still jumped in and loved it. Walmart never said it, but they made it clear.
Right.
But
Right.
you love this guy over here and he won't talk to you or partner with you. Right. Oh,
No, not at all. I just thought, anyway, I thought that would be a fun way to close this out here.
yeah. One last analogy. This good friend, Maureen Cobden, she told me this way back in the day that Amazon is like the mean kid at school, right? That super cool, wicked attractive, super smart. But he sits at their own table and you don't really like them. But when they invite you to sit at the cool kids table, you go.
You
For
go.
whatever reason. You don't know why you go and show up, but you almost like have to. And you sit there and they eat your lunch and kick you underneath the table. And then you stand up and walk away and tell all your friends how you get to sit at the cool kids table. And they just have your lunch and you got bruises on your shins. Like, I just thought that was absolutely, I told her I forever give you her, kudos for that. But it was like, that's exactly it. They called us to the table. We went over there, we sat, they ate half our lunch and kicked us. And we got up and we're like, that was awesome.
I loved it. I love that kid. That's great, man.
I know, right? Too funny. Well, Rick, thanks so much for your time today. It's always a pleasure. I'll have you back a ton for sure. This is always great to catch up. But again, the Watson Weekly, Rick here's got a great podcast. I'd have everybody reach out, follow him on LinkedIn. He's routinely putting out great stuff that I use all the time to stay abreast of the newest things that are coming up. But thanks again, Rick, for your time today. With that, we're going to wrap up this episode of the Digital Deep Dive. Thanks, everybody, for tuning in.